Good evening, everybody. This is Johnny Seville from Acorn Wealth Corp, and this is your executive summary for the stock setups, I should say, for Thursday, the 5th of May. And let's have a look at the S&P 500. We've had a beautiful breakdown so far. Right now, we're looking at the weekly chart on the S&P 500, and that head and shoulders that we've just been praying for may be in effect. Looking at that weekly chart, you can see it's rolling over really nicely right now with money flow starting to peel off. Let's zoom into the daily chart and look at the short-term movement, and we can see that the short-term head and shoulders also seems to now have played out. So we got that rally up into what was the high of 2083, and then and pull back. So we may have actually already had that right shoulder, and we've broken down. We broke an open range more than the 3 points that we require. So that's so it's right there on the 22.3% Fibonacci, and so now we're looking for that just to continue downwards. The target here is 2,000 in the short term. Obviously, our longer term target though is we're looking for a breakdown on that weekly head and shoulder, which is going to take us down to around that 1600 level potentially, or lower. But certainly down to the 1750 areas where we reach that neckline. So so far it's looking very exciting in the bear direction, and I couldn't be more excited as to how well the positions have all been going. Let's take a look at the shorts. I mean, target moving. I hold puts in this, moving beautifully. Just rolling over perfectly. We sent out an intraday alert to look at picking up some of those puts on April 28th, just as it started to break down. That's done lovely. It's sitting underneath the 22.3% Fibonacci. Let's talk about JD. This was the alert from the executive summary we sent out to you on Thursday night. That's plummeting. The put options that we suggested are starting to skyrocket. So if you like triple-digit returns, this should be easily one of those over the next few days that will continue to drop. So big profits on that one. Goodyear Tire. Another one from alerts from last week that we sent out to you. I loaded up on puts on this one. I think this one has just moved really well. It's just kind of once the chart comes up, there you go. Had that rally yesterday off the 77.7% Fibonacci, and then straight back down today, not respecting that support really at all. So we can expect that to break down and possibly get all the way down to 27 first, and then our real target that we're looking for down at 21. If we get that, we're looking at about 1,000% return. Should be very exciting. Let's hope Goodyear's tires come off the road. All right, so TROV, also very exciting. These guys report earnings tomorrow. Of course, we talked about the put options on this one as well. If it broke down below 394, it's already down to 339. So amazing performance, 20% return already just on the stock. Options, obviously, that we suggested have soared. So that's really exciting. And obviously, if they report poor earnings tomorrow, then that is going to be a big bankroll for a lot of you who obviously are participating in on that one. So watch that in the morning. What else? TFLX, and Netflix, NFLX. Now, I mentioned in Trading Room last night that I wouldn't be too concerned about the rally in Netflix because it was a one-day wonder. Now, just wait for the chart to come up, and again, I'll point out what's going on here. Again, I'll have to excuse the slowness of the connection. We've had a massive storm here in Isla Mujeres, and it's taken down the internet, so I'm using one of my backup sticks. But back in Canada here in the next few days. Here we go, Netflix. One moment. There we go. Okay, so we can see that we had that the drop down, and then it basically had that one-day wonder where it rallied up, hit the 9-day, and it just curled right over ever since. So that's why I mentioned trading last night. I really wasn't concerned with that, and it looks like it's going to continue down. So Netflix also looking really good. What else? I hate to barrage you, but I mean, it's just very exciting to see everything working out so well. A&F, Abercrombie and Fitch, this one also doing really well. This is just rolled over perfectly. And you can see that it's just dropping down. Had that little bit of a rally a couple of days ago, and just continuing down, kind of like Goodyear Tire. Had the rally and just keeps pushing. So hopefully it can break that $26 level, and then should drop down into that $24 range that we talked about in trading room last night. And of course, last one of the other ones that I want to mention, ZUMZ, which I know Kyle and I are both really excited about. Both held a lot of puts on this one as well, and this one just keeps on pushing down and could continue to drop significantly. So that's a review of some of the ones in play. Now, just a quick chat about gold. Heckler. Now Heckler has already hit my target, and gold also had a big drop today. I'm not a favor of Heckler or any gold-related investments at the moment. I'm very nervous about just I keep talking about the channel that I've been worrying about in silver and in Heckler in general, and also the head and shoulders on gold. We'll look at both of those. But I mean, if we look at Heckler, we've got this upward channel that we've broken beneath. So I'd stay away from Heckler at the moment until it consolidates. There may be a buying opportunity as it hits this moving average here around 360, but I'd just like to see what happens. Also, with gold, just looking at the way it's shaping up, I think that gold is quite possibly in a head and shoulders pattern, a complex head and shoulders pattern. We won't know yet. It could also be a flag, but right now it's just I think there's much higher probability trades, and I'm just a little. I just want to keep on the sidelines. I wouldn't get out of gold yet, but if it breaks below the low of yesterday's candle of 1271. In terms of the physical metal, then that would warn that we're actually going to probably pull back to around 1245, then have a head and shoulder, so up to 1280 again, back down to kind of 1250, and possibly a second shoulder, but then a breakdown to around the 1200 level. That would be my concern. And then it would hit the moving averages and possibly rally again. But there's just too many questions for me at the moment in the gold and silver front. So where I'm really looking at is kind of in these shorts. And boy, do I have a list for you tonight. Firstly, rate. I'll go through this quickly because there's a few of them. Rate. Stock trade looks awesome. I look for a rally back up to the 9-day moving average, kind of come up to about 870. I look for a drop then to 713. So we're basically getting $1.50, $1.57 of reward. And I look at a stop loss at 913, so there's only 43 cents of risk there to the stop criteria. So great risk reward, and I think this one's got a good potential of dropping there. DXCM, now they already reported after market and were down about 2%, but this one could be an excellent candidate. I'd be looking at the $60 June puts, which are currently $2.80. And I'd be looking at the $51.13 target. Now, it could go lower, but that would be the first target. Alternatively, I'd also look at the $60 September puts, which are $6.20. So that would be the other one that I'd be looking for. Okay, so there's one. eBay. Now, eBay could be very, very interesting. Now, I haven't been watching eBay much, but it did come across my radar last night in the crash scan. And as you can see, we've got a decent, we've got a rising channel here, which indicates a drop from 24 down to around 22. And we can also have a look at the weekly chart. And you can see we've actually got a head and shoulder potential where that would indicate a drop down to as much as 14. So I'm actually looking at the 2250 July puts are 60 cents. But I'd also look at the $23 October puts, which are actually only $1.44. So that's actually how I look at playing the eBay trade, and that could be a really big potential. Again, triple-digit 500, 600, 700% return, possibly up to as much as 1,000% return if this thing just drops as much as it could. Of course, the target on the head and shoulder is also exactly where the 61.8% Fibonacci is. And if we go back a little further, you can see that's also where the shelf of resistance was back in 2011. So that's very interesting, and obviously everything starts to come together when we look at it that way. Now, we've also got Greenbrier. Now, Greenbrier, these guys look like they are going up in an upward channel on the weekly chart and are just about to break down as well. Now, of course, we're dealing with a possible big short squeeze in the S&P, so anything that these stocks have gained in the last few months, they're likely to just give up rapidly. And so this could be, again, another upward channel, as you can see here, which we'd look for a drop down to 2033. So we're looking at basically a 30% drop. So I'd look for a break of 25.97. I'd look at a target of 2033, and the option play of that could be looking at the September 25 puts, which currently have an open interest of 1,055 contracts, which is way more than anything else around it. So yeah, I'd be looking at the options at the $25 puts for September. Okay, the list does go on. These are, so we've got 1, 2, 3, 4. This is the fifth, sorry, potential. SBNY, Signature Bank. So this one I'd be looking at, this could be a drop from 130 down to 87.33. Why such a big drop? Well, let's look at the weekly chart. Again, another head and shoulder. So we could potentially be looking for a drop all the way down there to about 87.33. So I'd be looking at the September $120 puts, which are currently 210. Or the 115 September puts, which are 120. So either one, probably the one looking at the 120s would probably be a little bit more of the conservative play, obviously because you get the in the money while you're still inside the first part of the head and shoulder, coming down to that neckline that you see on the screen there. All right, two more. DLPH, big insider selling on this one. Lots of insider selling, and there was actually 1,000 today. The August 62.50 puts, there was actually 1,000 contracts bought just today. So they're currently trading at $2, and this one could possibly be a $33, $34 stock if that head and shoulders plays out. So there is a big potential there. Obviously, if we see a drop down of $30 on the stock, and we're looking at options that are currently priced at, as I said, about $2, then there's obviously huge percentage return potential there. So DLPH is one of my favorites there. And last but not least, EDC. Not the Electronic Daisy Carnival, but actually the Emerging Markets Bull 3 times Direction ETF. Now, I thought it was quite interesting to listen to the news recently saying that money was flooding into the emerging markets again, was the headlines on Yahoo. And of course, here we are seeing the emerging markets completely fall apart. Just goes to show how useful the news is. Anyway, this is obviously a leveraged ETF, so this is a very risky play, buying puts on something that's already leveraged. But I'd be looking at the $40 July puts, which are currently 17. Let's have a quick look here. Yes, sorry. Okay, so $40 July puts are currently $1.70. So now, if this breaks down, this could crack down all the way back down to $30. So that again could be a quite an exciting return if it's a rapid drop, as it is a 3 times leveraged ETF. So that's a lot to have a look at. But these are some amazing opportunities, and it's hard to miss any of them. Now, look, again, it's not about taking every trade. A long-term success is about having lots of trades that all have the same ingredients. And most of these trades, basically, well, they all came from the same scan, and they all have the same high quality of insider selling, unusual option activity, and big opportunities if this market keeps going down. All triple-digit and possibly more potential. So now, look, if you are not a fully fledged member of Acorn and are getting these alerts every day or every couple of days when we send these videos out, then you need to give us a try. It's $9 for an entire month where you'll get these video alerts, daily newsletters, and live training sessions every Tuesday, Thursday at 4 p.m. Pacific, where we review these stocks and show you how we find them. Again, $9, great trade there. You can simply sign up by going to acornwealthcorp.com/gold. It's acornwealthcorp.com/gold. Again, and you'll get these videos all throughout the week with new alerts, updates on existing positions, and 2 weekly hour-long classes so you can learn exactly how to do this yourself. So $9, give us a try, and continuing on past that, you can subscribe for $147 a month if you feel that it's worth it. And we hope you will. We'll see you all in the next Executive Summary. Take care.